Welcome to Invest Smartly Hub, the channel that brings you the latest updates in finance and investment, moment by moment, with smart analysis to help you understand what's really happening in global markets. Today, we'll discuss one of the biggest stories in the world of economics and gold. The yellow metal has surged to its highest level in nearly 3 weeks amid strong bets that delayed U.S. economic data could push the Federal Reserve to cut interest rates soon. Has a new era of gold's rise begun? And what does U.S. monetary policy have to do with it? Let's find out. In today's Tuesday trading session, gold continued its strong rally, rising by 0.3% to reach around $4,196 per ounce, its highest level since October 23. Meanwhile, gold futures for December delivery climbed by 0.1%, settling at approximately $4,450 per ounce. Although these numbers may seem small at first glance, they carry deep economic signals about where global markets are heading next. The main reason behind this surge, according to analysts, is that investors are betting the U.S. Federal Reserve, the country's central bank, may decide to cut interest rates next month. In recent weeks, markets have been in a state of anticipation due to a halt in the release of key U.S. economic data caused by the government shutdown, which delayed the publication of crucial reports such as the non-farm payrolls report. But after the U.S. Senate announced an agreement to end the shutdown, the longest in American history, investors began to expect economic data to start flowing again soon, along with clearer signals about future monetary policy. Experts explain that gold typically benefits from expectations of interest rate cuts because it's a non-yielding asset. It doesn't generate direct returns like bonds or bank deposits. Therefore, when interest rates fall, holding gold becomes more attractive for investors as it tends to preserve value better than cash-based assets. Simply put, when money in the bank no longer earns much interest, investors turn to gold as a safe haven. Jim Wyckoff, senior analyst at Kitco Metals, said that traders expect upcoming U.S. economic data to show clear signs of weakness, which could prompt the Fed to cut interest rates in December. He added that this outlook is encouraging bullish investors in both gold and silver to buy, noting that both metals currently appear to be in a strong upward position as confidence gradually returns to the market after a period of caution and uncertainty. Interestingly, gold's rally hasn't been alone. Other precious metals have also joined the climb. Silver jumped by 1.2% to $51.12 per ounce, its highest level since October 21. Platinum rose by 0.4% to $1,583.72 per ounce, while palladium gained 2% to reach $1,442.75 per ounce. These moves show that overall demand for precious metals is rising, reflecting growing concern in global markets about the future of both the U.S. and world economies. But why are interest rate cuts such a big deal? Because interest rates are the central bank's main tool for controlling economic activity. When rates rise, borrowing becomes more expensive, which slows down growth and spending. When rates fall, companies and individuals are encouraged to borrow and invest, boosting financial markets but also weakening the U.S. dollar, which in turn makes gold cheaper for international buyers and increases demand. Gold usually moves inversely to the dollar, meaning when the dollar weakens, investors tend to buy gold to hedge against the loss of purchasing power. As the next Federal Reserve meeting approaches, many analysts predict that December could bring the first rate cut in many months, especially after clear signs of slowdown in sectors like labor and manufacturing. These expectations are prompting investors around the world to keep a close eye on gold, which is often seen as an early indicator of monetary policy shifts. Despite the current rally, some experts believe gold's journey is far from over, especially if U.S. data continues to weaken. If markets become convinced that the Fed will begin a new cycle of rate cuts, gold could surpass new levels and perhaps reach record highs in 2025. On the other hand, if economic data comes in stronger than expected, these forecasts might temporarily fade, and gold could retreat slightly. What we're seeing now is a mix of cautious optimism and deep concern. On one hand, investors are hopeful that rate cuts will boost the markets. On the other hand, they worry that such cuts may signal that the U.S. economy is already slowing down significantly. Between these two forces, gold continues to move steadily upward, fueled by investors' desire for safety in uncertain times. In conclusion, gold continues to prove that it remains the world's ultimate safe haven asset, especially when global confidence in the economy or monetary policy begins to waver. And as expectations of rate cuts grow stronger, the chances of further gold gains in the coming months also increase. But the most important question now is, will gold continue its journey toward record highs, or will the next round of U.S. data bring markets back into balance? Either way, the coming days will be critical, and we'll be following them closely with you, right here on Invest Smartly Hub. Don't forget to support us by liking this video, subscribing to the channel, and hitting the notification bell so you don't miss any of our latest updates and smart investment insights. Thank you for watching, and we'll see you soon in a new episode about the world of money and smart investing.